everybody ready for the Mind Dog, the Magnificent Show? Start the clock!
And welcome, my friends, to yet another episode of the Mind Dog TV podcast. I'm Matt Nappo. Thanks for coming. It's great to have you here, as always. Thursday afternoon business edition. I'm still losing track of the days. And when, COVID was bad enough, but then when you throw a holiday weekend in the mix, I'm getting totally lost with the days. But I believe it's Thursday. Here in New York, where I am, it feels like a Thursday. That's all I can say. I'm a little nervous about today's program, only for one reason. The subject today is about really building your business credit. And as you know, one of my main sponsors and my sponsor today is all about business credit. So I'm hoping there is no conflict of interest here, and things will reflect well on my sponsor after this program. So I'm going to keep my fingers crossed and tell you about my sponsors right now. Fundwise Capital, you know all about them. You've heard me talk about them for probably about 3 weeks now that they've been on the sponsors on the program. They're a lender matching platform that gets you the best credit lines guaranteed. You can apply on lines in 60 seconds or less, and there's no effect to your credit score to see how much you can get. You can use the funding for anything you need to start or grow your business. You heard me right. I said start or grow your business. So if you don't even have a business, but you got a solid business plan, they can help you get funding. Get the best funding you can qualify for. Their strategic lender matching platform searches through hundreds of lenders to find the very best possible option for your unique situation. They have hundreds of 5-star reviews on Google, Trustpilot, and Facebook, and an A+ rating with the Better Business Bureau. Boy, oh boy. It's one of those days, folks. It's Thursday, but it feels more like a Sunday at the moment. They provide unsecured lines of credit at 0% interest for 9 to 15 months. You're not going to beat 0%, right? Can you beat 0%? I don't think so. They provide unsecured term loans based on income, and I think my guest today is going to kind of address that in some way. Short-term gap funding or bridge loans. They work with real estate startups, as I mentioned, franchises, restaurants, any kind of business. To get started, simply go to apply.fundwise.com/minddog. That's apply.fundwise.com/minddog, and the links will be in the description. As always, I thank you for patronizing my sponsors. As I mentioned, today is about building your business credit. Stephen Wible is an expert on building business credit who speaks energetically on the importance of learning more about the credit application process. A veteran of the real estate game, he lost it all in the housing crisis of 2008. Steve has led multiple successful companies and has had as many as 300 plus rental properties in his portfolio. Ladies and gentlemen, please open your ears, open your minds, and help me welcome in Steve Wible to the Mind Dog TV podcast. Steve, welcome.
Hey, how are you, Matt?
I'm pretty good. As I mentioned, I'm a little nervous because of my sponsor there and what you do, and I'm hoping there's no conflict of interest in any of that.
There's exactly no conflict whatsoever. They're a great company. They do great for funding. What we do, what Credit Suite does, is we're an education company. So we teach business owners how to build a business credit profile so they can get better rates and terms. They can get credit for things like, for example, Home Depot or vehicle financing or American Express, Visas, MasterCards, things like that.
Right. But one of the things, and I don't want to keep this focus on my sponsors, but one of the things that they suggest is if you don't have proper business credit yet, you can use your personal credit. You teach people the opposite about they don't need so much to rely on their personal credit. So explain to the folks the difference between business credit and individual credit.
Absolutely. So there's 3 main differences, really. So the first is obvious, right? One's tied to you personally, one's tied to your company. And when I talk about company, it can't be a sole proprietorship. It needs to be an LLC or an S Corp or a C Corp. Anything that involves a partnership or a sole proprietor, that's going to be tied to you personally, no matter what, because that's how the government sees your business. So that's how lenders and creditors will see your business as well.
I was not aware of that.
Right. So that's the first difference. The second is business credit limits tend to be higher than personal credit limits. Matter of fact, the SBA even says between 10 and 100 times higher. So, and I'll give you a good example of that. Let's say I owned a trucking company. Right? So I own a trucking company. I'm an over-the-road trucker. I'm driving from here to wherever. And I personally went and applied for a gas card. Personally, I may get a $300 card, maybe even a $500 card, because that's about all I'm going to consume as an individual, right? But a trucker I've seen limits of $50,000 for fleet credit cards.
Wow.
See the difference?
Yeah, I a little bit.
Right. So, and I'll just use my history. Home Depot, I had over $50,000 in credit with Home Depot, where my company, where me as an individual probably couldn't get $2,500 at the time.
Right.
But because I was producing or generating so much revenue for them, I was buying so much, it just made sense to give me those type of limits.
So it's kind of confusing here. Does you say generating, but they don't balance that against what your payroll is and all your payouts? It just matters how much you're generating.
Well, it's going to depend. Look at it this way: they're looking for customers. They being whoever the lender, creditor, vendor is, right? So I'll use my experience in the printing industry, which is where I came out of. They didn't ask me for my balance sheets when I bought $1 million in paper from my paper vendors, because I regularly was buying 100,000, 200,000, 300,000, and I had proven myself through my business credit, right, through paying my bills on time, that they could expand and expand and expand that credit limit for me, right? So businesses, like I said, will generate way more revenue and generate and get way more credit than an individual would.
Right.
Okay? It's not unusual to see a sales organization have 15 to 20 cars in the company name. Nobody signed for them personally, if they built their business credit profile the right way. Okay, so that's your second difference, is the limits. And the third is pretty obvious. If things go bad, and we all like to assume every business is going to succeed wonderfully, right? We're all going to be Jeff Bezos. The truth of the matter is, most businesses don't make it past year 5.
Right? Oh, year 5. I thought it was year 1 actually. But
well,
okay.
I was trying to be optimistic.
Okay.
It is a Thursday.
Yeah.
So most of them do not make it past year 5, and you're right. Most of them fail in the first year. So wouldn't it be nice to have the comfort of protecting your family, where if you, let's say you had $50,000 in credit, I'm going to use that same truck driver for fleet credit, and it wasn't tied to you personally, and the company just went down. It just, your business went down. You could walk away from that $50,000 in debt personally. You can, it goes down with the company.
Right.
That's really, to me, the key. And by the way, that website, Business Credit Speaker, send them to creditsuite.com.
Can you send me that link after the show, and I will definitely put it in the description to get people to go there instead. So
absolutely, I set that up for people who were inviting me to speak around the country. Now nobody invites anybody to speak anywhere. Right?
Well, that was going to be my next question. You wrote the book about building your credit step-by-step process. I'm assuming you wrote that in the pre-COVID era, as we call it. It is like your space. Caveman period, whatever you want to call it, space age, and now we're in the post-COVID era. So I'm assuming you wrote the book and came up with this system that you teach in the pre-COVID era. Yes?
Well, actually, I didn't. I did as far as writing the book, but the company I work for, our CEO, Ty Crandall, created this company along with our COO. They developed this back in 2000, it was 9 years ago, 8 or 9 years ago. Now, business credit wasn't created by Credit Suite, right? What Credit Suite did was organize it in a way that they could teach business owners, because business owners have no idea. Yeah. None. They don't teach this. Just like they don't even teach basic arithmetic, as far as I'm concerned, in school anymore. They definitely don't teach business owners about business credit. Here's what they teach you. Put your social on here. Put your social on here. Put your social on here.
Right.
And it makes good sense, because if I'm the lender, I definitely want you personally on the hook if I can get away with it.
Right? Yeah.
But I'll bet you anything, Sam Walton didn't sign for anything personally, right? Walmart is the #1 purveyor of business credit. Their entire business plan is built on business credit. Their entire business plan. Anything you buy from them, they haven't paid for yet.
Right.
right?
Yeah, I remember reading that when I read Sam Walton's bio, probably in 1980 or something around there, and I remember him leveraging credit for just about everything he did exclusively. So, yeah, that rings true with me. So, I know a lot of businesses, though, and somebody I was doing some freelance work for last year, constantly. And even though he was generating a lot of sales, because it took so long for him to fulfill the contract, he was building large ticket items, packaging machines that could be as big as a house for like General Mills or whatever, or food companies around the world. And so it would take from sale to fulfillment. When he delivered, it could be 3 or 4 years. So he was constantly getting in this place where there's money coming in when we deliver this thing, but we're behind in payroll, we're behind in all these things, and was constantly being chased after by lender companies who trying to get him to take loans on his personal, on his social, as you said. So that was like a never-ending cycle for him, is constantly signing away his life and then having to kind of borrow from Peter to pay Paul and that kind of stuff. Is that the kind of stuff that you try to help them avoid getting into?
Yeah, in that example, what I would have suggested was, look, don't do that. Take your purchase order. If it's from General Mills, that's a legitimate company, and you can get a loan against that purchase order that gets paid back once you fulfilled the purchase order.
That's something I think most business owners probably are unaware of, that you can take a loan against a purchase order. Or does it have to be a major corporation like General Mills or something to do that?
Well, it can't be your cousin Vinny. You know what I mean?
Right, yeah.
It can't be cousin Vinny's garage is going to, order $1 million in stuff from me. No, it has to be a legitimate company. They can research. They can easily find out, make sure they pay their bills. Because what's generally happening there is the lender is taking on the risk.
Right.
They're saying, okay, we'll back you. We trust you that you'll produce the product, and we trust that they'll pay the bill. The problem with that is you could do it that way, or you could do it with receivable financing, which is a little bit different, where you actually expose your customer to the lender directly. In other words, the customer and the lender know. But that's a whole different subject, and it's a different type of lender. What I'd love your listeners to understand is that even if they're a startup today, they started a business today, they could build a business credit profile in 6 to 9 months, where they can actually generate between $50,000 and $100,000 in credit for their business with no cash flow, cash flow. And it's really not that hard. It's just having the roadmap to do it and understanding the things that vendors and lenders are looking for if you're a startup company. Because that's really where people run into a problem. Because they're a startup, they go, oh, everybody's going to want me to sign for it personally. I'm going to have to break out my personal credit card because I'm a startup. They don't even have faith in themselves.
Right. Yeah.
Right?
Yeah.
But the reality of it is, if they understood the system, and that's really the key, they have to understand the system. If they understand the system and they play within that system, the right way, do all the things that they're looking for, they're going to get instant approvals, automated approvals.
Wow.
And I can give you 3 of those items today that almost everyone fails.
Please do.
Okay, perfect. So the first thing that a lender is going to look at, that when you have no credit, they're looking to make sure you're not a fraudulent application, because almost all applications are done online now, right? You know
Right.
that, right?
Yeah.
And it's all decisions are made with artificial intelligence. They're not looking at every application. They have these algorithms that they're looking for, and I call them gates, that either you can get through or you cannot. So the first thing they're going to look at, very first thing, is the name of your company. What type of name is it? What you want to avoid is high risk industries. Right now, all businesses, quote unquote, are high risk, but you don't want to get into something like ammo and guns, gambling. You don't want anything like that. Financial, you never want to use the term financial in the name of your company. Okay. Now, I know we use Credit Suite. That's another no-no. We had to make a decision: do we want to build business credit or have a good marketing name? Right. So we went that way. We still were able to overcome it. It was just harder. So that's the first thing they're going to look for. That's easy. The name of your company is going to be the name. But this is where people fail. Most business owners are working from home. Forget COVID. They were doing this anyway. Most business owners started home, just like I started in my basement. I'm sure you started in your house, right?
Yep.
That's okay. But then if I ask a business owner for their phone number, what do you think the number is that they give me?
Cell phone.
You got it. You got it. It's a cell phone because we're attached to them, right?
Right.
They never leave our hands. The problem with that is you're old enough to remember, I believe, just like I am, when you used to pick up the phone and dial and literally dial 411 and get Joe's Pizza or Tommy's Garage or whatever, right?
I'm old enough to remember the telegraph, buddy.
Send it by Pony Express.
Yeah, right. Pigeons.
So, anyway, that's called the National 411 database, and that database still exists. Problem is, I say kids loosely because I'm in my 50s. People don't know it even exists or even what it is because they just Google it, right? Just Google it right up.
Right.
Well, the artificial intelligence actually checks that database to see if you're legitimately in business, and you can't list a cell phone.
Wow.
It has to be it has to be a business number. The problem is nobody wants to call AT&T and put a phone on their desk, right?
Right. Yep.
There is a solution to it. It's called a voice over IP. All right. Some people out there would recognize this as like a Google number,
right?
Where they call the number and it forwards to your cell. Problem with the Google number is Google owns that number. They have the rights to that number. You're not paying for it. You have no rights to it, so it's not yours. It comes up as a Google number. Okay, so you have to pay for this number, and you can go. There's companies out there like Ring Central or Grasshopper, where you can get a virtual phone number, and we suggest an 800 number.
Right.
Okay, so that's the first thing that almost every business owner fails, especially new business owners. So virtual phone number, remember that. The second thing that they'll fail is, and this is just unbelievable to me, I own a business at yahoo.com. Yeah. How about info@mybusiness.com?
Right. Yep. Yeah. I agree. I get a lot of those AOL. I'm surprised at AOL. I'm like, what the hell? AOL. What are we, 1992? What people still using AOL mail?
I actually say that at my live events ago, and God forbid you're using an AOL.
Right. Yeah.
But it's true because it's free. I get, when you're starting a business, you're trying to conserve funds, right? It makes sense. So I get why they go with the free email, but what they don't realize is they're pigeonholing themselves. They're letting lenders and creditors know that they're a small business that has no revenue. Right? If I sent you a purchase order, or let's say I said I worked for Walmart, I'm going to pick on them again, and I sent you a purchase order for 1 million widgets that you sell, and I put my email as purchasing, Walmart purchasing at yahoo.com. Would you think it was a scam?
Yeah, I would.
Of course you would, right? I make this as a joke. I own XYZ company. I'm a consulting company. My email is partydue2000 at yahoo.com.
Right.
Don't put that on a credit application. That's going to get you an automatic denial.
Yeah.
Right? Automated. All right. So now, if you like Gmail like I do, you can get what's called a G Suite, G-Suite, and I think they charge $6 or $7 a month, and you can get a professional email. So there's the second thing. The third, and this is the most difficult for people, is the address. So, we're all working from home, and the problem with a home address is twofold. One, I could pull your business credit report. It's public information. On your business credit report is a picture of your office.
Right. Oh.
Yeah. So if you're, and I don't care if you're living in a trailer and you're representing yourself as a broker of skyscrapers in Manhattan, you may not want to use your trailer address as your business address.
Right. Yeah.
Right. You might want to get what's called a virtual office. Okay. And I'm sure you've heard of them.
Right.
The biggest in the countries are Regis and Alliance. Now, a virtual office is not a PO box. Okay. Right. And I want to say that again for those in the cheap seats. It's not a PO box. A PO box is an automatic denial every single time.
Wow.
Every single time. And you want to be careful because some people represent themselves as a virtual office and they really are just a PO box. Okay. So that's why we always stick with the big companies, the Regis and the Alliance, because they're everywhere. They're in every state in the country and every city in the country. Here's why a PO box doesn't work. And it's going to make complete sense to you listeners. So I want to borrow $50,000 from you, right? And MindDog TV is now MindDog Lending, right? And I want to borrow $50,000. And I say, I own a business. You say, great, Steve, fill out this credit application and we'll get back to you. And I fill it out and I put my company name is, I Never Pay My Bills, Incorporated. And then my phone number is a throwaway cell phone. My email is I'm going to rip you off at yahoo.com. And then my address is a PO box, never, 12345. Right?
Right.
How comfortable would you be lending me $50,000?
Yeah, about the same as when I get those emails from Apple that is Joe at
Yeah.
indiapress.com or something like that.
Exactly. So these are really minor things. We call them fundability factors, and there's 214 of them. I'm
Right.
giving you real basic ones because I guarantee you, all your listeners, I know you have millions of them. If they own a business, 99.9% just failed on those three.
Right.
All right.
Well, what you just said is extremely helpful, and thank you for that. My gut reaction is this is something people need to address before they even start their business. Like when you're talking about these, setting all this stuff up and considering, the cell phone and because my house is now going to come up as my office, even for months after I sign up with the virtual office, right? It takes some time to kind of propagate that kind of stuff.
No, it really doesn't actually. So let's talk about Dun and Bradstreet, because Dun and Bradstreet is the one of the main credit reporting agencies for businesses.
Right.
You get what's called a DUNS number. It's free. Don't let anybody pay for it. It's free. If they try and sell you something, just say no and get your free number. They're required by law to give it to you. So you could do what's called an iUpdate, and you could update your address instantaneously. Okay, so it's not something. And by the way, I've had people work with us who've been in business for decades and were wrong, and we showed them how to correct the things that were wrong. And it's a matter of congruency. Everything needs to match everywhere. So, and I've seen this a million times where people will have an office address, they'll have an office phone number, they'll have a professional email, they'll have their business bank account set up, they'll have everything correct. But because they didn't want the IRS paperwork coming to the office, they put their address as their home address with the IRS.
Right.
They didn't want any notifications coming to the office. They wanted to come to the house. I get it. The problem is when they scan your information, that pops up and they go, whoa, looks like fraud now, 2 different addresses. Nope, denied.
Right.
So
Yeah.
you have to make sure it's all congruent. If you have a website out there with 123 Main Street and your address is now 345 Main Street, you need to change that website.
Right. So you mentioned over 200 of these elements that you need to have kind of lined up in congruency and all that kind of stuff. That's where I'm guessing you would recommend that people don't even apply until they kind of run this stuff past you first, right?
Yeah, they could even go to our website and get a free business credit building guide, the 4 steps, and it's going to give the basics. Now, don't get overwhelmed by the 214. A lot of it you already have. In other words, there are some normal things that you almost can't screw up. I call it Fundability Wheel. Looks like a wheel in a car, right?
Right.
And what happens is most business owners ignore 1/4 of that wheel, the business credits wheel. They just focus on the personal credit, and you mentioned it, cash flow, P&L, all that good stuff. So that's great, but how far does a car go with 3/4 of a wheel?
Yeah, not
Right.
too far.
Right.
Might make it out of the driveway. We have somebody in one of the chat rooms. I'm not even sure which side this is. It says it might be Facebook or something. Benjamin showed, hey, can you give me advice for my business? I'm looking to make at making a loss of $12,400 by the end of the year.
Yes. Raise your prices.
Yeah. Well, what about that situation? We talked about people who fail in the first year, but you're allowed to take a loss in the first year. People who are struggling on that end, is there anything they can do if they're really realistically looking at their numbers and saying this isn't going to work in the first year, but they have a plan for the second year that is viable? Is there anything they can do about getting some funding to help them?
Well, absolutely. They can contact your sponsor.
Yeah, right. That's true.
And then at the same time, they should be building their business credit profile so that at some point the business stands on its own 2 feet from a credit point of view, right? So it's not either or. You should do both.
Right. So how do you start to build your credit profile? What it's as simple as just kind of going through those 200 plus elements that you need to get in line beforehand, or what's the process for building it?
That's a great question. And yes, your first answer was correct, although most of it's pretty easy. Usually people can accomplish that in a week. But then to build your profile, in other words, to have things reporting on your business credit report, you have to know who reports. Here's the problem. Only 7% of creditors and lenders actually report to the business credit reporting agencies. 7%.
Wow.
So you have to know who to go to, right?
Right.
I'll give you an example. American Express at one point did report. Then they stopped reporting. Now they're back reporting. And you have to know that information. And that's really where our team's key. We have a team of researchers. That's all they do. So you have to know who to go to. I'll give you an example of somebody who does report that will give first-time business owners or new businesses credit normally. It's a company called Quill, Quill.com. They sell, they're like a tiny little Amazon. They sell office supplies, inkjet, toners, snacks, things you would buy for your office. They typically would give a new business credit limits from anywhere from $500 to $1,500, and they report on Dun & Bradstreet. The problem is, since COVID, they are no longer a starter vendor. They've moved into tier 2. Once again, things you have to know. So that book I wrote was worthless about 3 weeks after I wrote it.
That's why I asked before. I assumed you wrote it in the pre-COVID era.
I did.
As I meant, it
really isn't even that. It's business credit's a moving target. It's constantly changing. So it has nothing to do with COVID. COVID made it worse, but it's forever changing. That book was worthless less than 8 weeks after I wrote it. So I don't want anybody buying that book.
Wow, what a shame. So and you put in all that work to create the book, and then it's got a lifespan of very short time. That's wild, man.
It is, and that's why there's people out there that are teaching business credit that have the same platform that we have, similar platform from years ago, from 10 years ago. That information is just dead. Right. They don't have the team. We have an infrastructure of 100 employees. We have teams that's all they do is research vendors and lenders who actually report. You've got to know their underwriting criteria. You've got to know who they report to, and you got to know if you're going to get approved. Right. So those 3 things are key. That's how you build a business credit profile. And if anybody wants to find out how to do it, even without working with us, they can go get that free report. And we're going to give you some beginning steps.
Yeah. So now when people come to work with you to learn this stuff, what's it like? What's the experience of that? So they go to the website, they fill out like a basic profile or for a consultation. How does it work?
It's exactly what happens. They set up a consultation. Look, everybody does the same thing. They come to us and they go, I want $1 million. Okay, great. How's your personal credit? Well, I have a 450 credit score. How's your business credit? I don't have any. Do you have any cash flow? No, but I need $1 million. So it's almost always starts off that way. I kid a little bit. They come, they want a consultation, they want to learn how to build their business credit profile. I always give them some free information. It's kind of like, if you own a brownie store, I'm going to come in, I'm like, man, brownies smell good, but I don't know if I want to buy any. You're going to let me have a little taste, right? So I like to help everyone that comes in. Even if they can't afford our program, we want to help them as best we can. So we teach them the basics like I was teaching you, like I was teaching your audience. And then we give them a couple of vendors that they can get approved for. And what happens is they get approved. Now they get excited.
Right.
They're like, whoa, that was easy.
Right.
And then they go to find another vendor and they bang their head on a wall. I hear it all the time. People say, well, I've been doing this on my own. I'm like, good. Yeah, listen, this has been around forever. You don't need us to do this. You just got to find it. And then they come back 6 months later, like, I said, how many more have you added? None. What do you mean none? I can't find anybody. Typically what we see is people try to do on their own, take 5 years. People do it through us, takes about 6 to 9 months. And I like to describe it this way. If there's $100,000 in your backyard and you live on a 20-acre farm, you can do one of 2 things. Take a shovel and start digging, or you could take the map and the shovel. We're the map. So you're going to find it eventually if you dig enough holes, but we're going to guide you to it.
So it strikes me as being, just kind of a thinking out of the box type of guy. Sometimes anyway. The number one objection when it comes to sales is we don't have the funding for it at the moment. So it to me, I'm just thinking a salesman would be great to kind of refer people to you and say, oh yeah, if that's really your main objection, I have a guy who can help you with that.
Yeah, except the problem is, and it's an instant gratification world, right?
Right.
Education is not instant.
Yeah, that was going to be kind of my next question. How long does it take to really get well educated in this stuff?
Most people we find, look, it takes you it's a never-ending journey. So business credit isn't a destination; it's a journey, right? Because we have people that have built up millions and millions and millions of dollars in credit because that's what they felt they needed, and then we have people who've taken it to a level and they're like, "I'm good. This is all I need." So it's a journey. However, typically a startup can build 50 to 100,000 in 6 to 9 months, typically, and it's really just logistics. And anybody who has ever worked on their personal credit is going to get this right away. If I paid off a credit card today, let's say I would discover 10,000 and I wanted my score to jump and I paid it off today, my score doesn't jump 100 points tomorrow.
Right.
It's got a cycle. They got to, see the payment. They got to report it. It takes time. So logistically, it just takes time. We're waiting for things to report. And in the business credit world, typically they don't report every 30 days. It's 30 to 45 days.
Right.
So as you're waiting for things to report, you can't move to the next tier until you have X number of items reporting. Then you go and then you apply, then you use the product, then you get the bill, then you pay the bill, then they report. So you can see where when people say, well, this is going to take too much time, too much of my time, I go, if you spend an hour a month on this, I'd be shocked. Maybe 2 hours. It's just waiting.
Right. And if you need the money, if to grow your business, time is something you got. Money is something you don't have, and what you need, you might as well invest it. You mentioned that the lag in reporting. Sometimes it seems to be a one-way street. If I miss a payment, my score is going down tomorrow.
Instantly, right? And here's the thing about business credit as well. There's no such thing as the Fair Credit Reporting Act in business credit. Okay, the Fair Credit Reporting Act is a consumer credit protection,
right?
For lack of a better word. In business credit, there is no such thing. There is no protection for your business. So I warn people, don't lie, because they're going to find out. And once they find out, they're going to mark your account as fraudulent. It's literally going to say fraudulent on your business credit report. You're done. You might as well close your company. You're never getting credit from anybody ever. And you'll never get to work with the government, because the government looks at your D&B, your DUNS number. They look at your D&B profile to see if you pay your bills.
Wow.
If you go for government contracts. So, don't lie. Don't buy a shelf corporation. I see this all the time. People go out and they'll buy these 20-year-old corporations, be like, yeah, I'll scam the system. Look at me, I'm 20 years in business. I'm fundable now. Not true. Maybe 20 years ago it was.
Right.
Not now. Artificial intelligence can find that information in 2.5 seconds.
Wow. So this is really, really a very fast evolving business model, in a whole business way to do business. So the question then, Lisa, is it a never-ending education process for somebody getting in on it? So they start with you, they go through this process, they understand how to build their credit portfolio, their business credit portfolio, and then 6 months do they need to kind of take a refresher course?
No, but it's funny you bring that up. We give them 5 years access to our platform, even though they don't need it. The reason we do it is because we're forever adding and taking away new lenders and creditors. Because if they don't approve you based on your business credit only, we don't want them in, right?
Right.
So as things change, we pull people out, add people in. So we give them 5 years access. But the reality of it is, once you understand how it works, and not to leave your social, put your social on an application, and if they demand you do it, we teach you how to present that application in a way that's a little bit different. Once you understand that process, you don't need us. See, we're teaching you. It's kind of like once you learn how to drive, every time you buy a car, you don't go back and hire that same person to teach you how to drive that car, right?
Right.
Once you understand it, the hard part's the beginning, but once you get it, you get it. And I have to tell you, I sat, and I won't tell you where I saw this, but I sat and watched somebody put a credit application in for a MasterCard at a big distributor, big company. And I'm standing right behind them. And the woman behind the counter said, I'm going to need your social. And this woman said, no, you're not. Go ahead and run it the way it is. They'll pull my business credit, because it was a business credit card she was getting. Woman rolled her eyes and she submitted it to the bank, the underwriting bank. And I'm listening to this whole conversation. And they get on the phone, and then they put her on the phone, and I obviously, she had asked, hey, we need your social security. She said, no, you do not. Run it through your underwriting team and let me know. 5 minutes later, they came back and said, you're approved for 15.5.
Wow.
No social. And I was laughing when it was all done. I walked up, I said, you get business credit? She goes, I do. I took a class with Credit Suite. I'm like, oh, that's us.
Cool.
She understood. So she got approved without her social. Now they will ask for your social for identification purposes. and you have to be clear about that. Because they're trying to stop, fraud, Homeland Security, all that good stuff.
Right.
But
Wow.
anyway, so once they learn it, they learn it. They don't have to keep getting updated. You learn it.
Right. Wow, that's pretty cool. I so many times I had somebody on the phone the other day who asked for my social, and I was like, that's a conversation stopper with a lot of people. You know what? I'm not moving any further. And she just then started trying to play a game with me. And it was somebody who was offering me a line of credit, and I was interested in hearing what she had to say. She said, "How about I read off so she already somehow had my information. She said, "How about I read off the first 5 digits and you give me the last 4?" It's like, what the hell is that?
That's weird. That's very
Yeah.
strange.
Yeah.
Yeah, I've never had that happen ever.
Yeah. So my immediately thought was, this is somebody who's just trying to scam me. Somehow they got my first 5 digits or something, and they need the last 4 digits to kind of rip me off somehow.
Absolutely.
I just told her, bye, don't call back. But I know a lot of people when it comes to that, that's a dangerous place to be, giving out your social too much, especially in identity fraud, the era of post-identity fraud. Well,
Right.
We have a lot of different eras now.
Yeah, and think about it this way. That's why these lenders and creditors want those fundability factors, right? Because if 50% of the applications are fraudulent, right? I mean, look how easy it would be. You don't have to give your social. So I set up a company, and I set it up from home or whatever. I do all the things, and then I get approved for, let's just say, $25,000 in business credit from Amazon, right? And I max that out, and I buy $25,000 in stuff that I can easily sell on the street for 10 grand.
Right.
And then I shut down my company. Right?
Yeah.
That's what they're concerned about. That's why you have to look credible, because they want to make sure you're going to be in business. They're extending you credit. I don't care if it's net 30 vendor credit, it's still credit.
Right.
Right.
Well, going back to what you said before about the name, and you don't want any of the high risk businesses in your name. So in some way, you do really have to give some thought to this before you start your business, or go in and change your business name at some point and take a good look at it and say, do I need to re-register my business, change the name of the business? Because and the other part of that is, is there like a comprehensive list of what these high risk businesses might be? You mentioned credit and that financial stuff.
I'll tell you what I'll do. I will give you the restricted. There's restricted, then there's, which are automatic declines, and then there's high risk. And by the way, high risk is everybody. Like I was in real estate, high risk. Retail, high risk. Courier service, high risk. Dry cleaners, high risk. They're all high risk. So don't worry about the high risk. It's the restricted, which means automatic declines. Here they are: ammunitions, weapons manufacturing, bail bonds, check cashing, oil trading, basically day trading, finance, anything finance. Banks, it's funny, banks won't give banks funding.
That's bizarre.
Mortgage brokers, security brokers, commodity brokers, mortgage bankers. If you're in the finance business, you're not getting any loans. Okay. Gaming or gambling, so casinos, loans for speculative purchases of securities. In other words, funding for like day trading again. Pawn shops, political campaigns, by the way, the worst paying people in the world. And public administration. So now they won't give the government or the banks a loan. What's that tell you? Right. And X-rated products or entertainment. That's it. That's the whole list.
The only thing that really surprises me there, and I've had the experience with political campaigns, so I'm still trying to collect on a AV job I did for the Clinton campaign in '92. Seriously, they never paid the bill, and I still kind of submitted every once in a while just to see what's going to happen, and never hear anything. And it wasn't a lot of money either; it was like $1,500. But the only one that surprises me on that list is real estate, because
real estate's not on that list. That I said real estate's considered high risk, not restricted.
Oh, okay.
I was in real estate and built business credit.
Right.
What I was trying to get at is that almost every industry is considered high risk. So I kind of ignore the high risk.
Right. Okay.
But I certainly wouldn't call it Steve's real estate investment firm.
Right.
I would call it Wible Enterprises.
Right.
That's it.
Yeah.
Wible Enterprises, right? And there's one thing I didn't mention. A lot of people will start their business and they'll move forward and they won't set up a website, which I find amazing. In today's day and age, I find that amazing.
Yeah.
They are going to look. You want to be the one giving them information. You don't want them finding information. So they're the first place they're going to look is, do you have a website? And whatever you say about your company, they're going to believe. If you don't put up a website, then they're going to go elsewhere.
Right.
And you never know what they're going to find. So to me, your website is also telling lenders, hey, I'm legit. I'm here to stay.
Right. As somebody who does, I do. This is one podcast, one show I do twice a day, but generally this episode, the afternoon episode, is business, and the evening is entertainment. But so I do 2 shows a day, generally at least 5 days a week, sometimes 7 days a week. And you would be surprised at the number of people who, when I ask for their website, what we're going to promote and send people to, it's their Facebook page or something similar to that, or just an article that was written about them. It's like, that's not going to help establish your credibility with the audience. You have to have some place that I can send them to that they gives them, a feeling of this is a legitimate business and not just your Facebook page.
Exactly. That's your audience. Now imagine being a lender.
Right. So if you're going to ask me to go into my pocket and give you money, and based on your Facebook page, you're basically going to ask me to say no right off the bat.
Yeah.
No.
It wants to add in a PO box and a throwaway cell phone, and you're the trifecta right now.
Right. On the issue of the phones, does it have to be through a business phone provider? So most people get a lot of people now get their phone, internet, and all that stuff, cable TV, through the cable TV provider. Can that be listed as a business? Can you ask the cable provider to list that as a business phone, or
if you're bringing it in under the business name?
Right.
In other words, if the business is the one getting the bill, then
so
it's
I have to put my cable TV in my business name, and then I'll be cool with that.
Right. Now, if it's listable, not all phones are listable. So what I tell people is, look, you want to verify that it's listable. You ask them, they're probably going to tell you yes. They may or may not even know, because they're trying to sell you. So you can go to listme.net and see if it is.
Right.
Okay. But you want to be careful. That's why we really only recommend one company, because we know it works every single time. And by the way, your cable bill is not going to be an 800 number, and we prefer to see you get an 800 number.
Right. Good idea.
So, because again, you're trying to project a certain image, right? You're not going to show up at a corporate dinner wearing flip-flops and shorts. Well, I might, but but most people would not, right? Same, especially if you're meeting with your banker, right? Same thing here. We want to present your company in the most viable light. And the most viable light is going to be a professional website, professional phone number, an 800 number, a fax machine. Yeah, I know nobody uses faxes today, but you can have one that forwards to your email, a virtual fax. Because banks still deal with faxes, just so you know.
Right.
They still deal with original signatures. You want to have a real physical address, whether it's a virtual address or your home, whatever. You want to put your best foot forward. Remember, you're asking them for credit. They're not asking you to give it to you.
Right. Well, I think now they are more than ever, because yesterday, and I'm not sure if it was because, you wonder with this AI stuff, how much they really are looking at what you do, where you go, and all this kind of stuff, and the tracking through your search engine stuff. But in the last 2 days on social media, I've probably seen, no exaggeration, 20 ads for business credit companies. And I've had this sponsor for 3 weeks, but I think it has something to do with me posting the business, build your business credit, this episode being on today. And then all of a sudden, so the only reason I'm bringing that up is you said they're not asking to give you credit. I think, at least as of yesterday, I had 20 different companies that were kind of soliciting me to apply for them.
Well, that's going to happen. Look, in this world of Google, I try to be careful what I say even around this.
Yeah.
Right? Because my wife and I tested. I won't tell you the term we use, but we wanted to see what would happen. And sure enough, within 24 hours, all the ads for that product showed up all over our Facebook. Or we're like, whoa! Right. I never searched it. We just talked about it.
Right.
So that's going to happen. But you're right. They will come looking. And I use this when I'm talking to people. I say, look, have you ever gone out to your mailbox and received a credit card offer?
Yeah.
If you had good personal credit, right? Now, how come you got that offer, but your neighbor didn't? Maybe they didn't. They say, well, they bought my information from the credit reporting agencies. That's exactly right. Now, they didn't get your credit score, but they bought information for this zip code, credit score between 690 and 800, right? And then they mail those offers because they don't want to just junk mail them to everybody. They mailed to very specific people.
Right.
They bought that information. Well, don't you think commercial lenders do exactly the same thing with your business credit report?
Yep.
So if you build up a big enough profile, what happens is it's a shift. Instead of you chasing the money, it starts chasing you.
Yeah. Okay.
Because they're buying that information. They're sending you, offers for. I mean, when I opened my business up, within a year and a half, it seemed like every bank in the world was sending me loan officers. Well, I had an amazing business credit profile.
Right. Well, that makes sense because I just started my business in October of 19. Officially, documented all the business. I was doing some business before that. But within now it's coming up on a year anniversary, and all of a sudden I'm starting to get offers for business credit and stuff like that. So they probably, if he survived the year, maybe he's got solid business credit and. Yeah.
Well, at least he's got cash flow.
Right.
He survived a year. But that's what's going to happen. So this isn't, look, business credit isn't the end all be all. It is another tool in your toolbox, right? Just like your website is a tool in your toolbox. Your phone, everything's a tool. This is another tool.
Right.
Right. So that's what people have to understand. The problem is people don't even know the tool exists, let alone utilize it.
Right. So
that's our goal.
I want to take it back one more time to before you start your business, because you mentioned it's not for sole proprietorship. Now, most people in my position don't give much thought to it. I'm just going to start a sole proprietorship. I guess it makes sense right from the beginning to start with an LLC, even if you're just a sole guy starting out like me.
Well, look, I've started and built many companies, and I will tell you, it's no fun when you get sued personally.
Right.
If you get sued personally, an LLC is an LLC for a reason, limited liability. Right. So I would never have a business without it being at least an LLC. And then I wanted to make sure I was protected. I just can't imagine it. But in addition to that, why not build a separate credit profile? Look at it this way. Worst case scenario, you have great personal credit and you have great business credit. The world's your oyster. You get whatever you want.
Right.
SBA loan. Most people don't realize this. They get turned down for SBAs all the time. I see it all the time. And, it's the hardest loan to get. No, it's not. How's your business credit profile? Well, there's nothing reporting. So 1/4 of that wheel is missing.
Right.
So guess where they have to dive deeper now? Your personal credit report.
Right.
Your cash flow, your P&L. They're going to look even harder at it because they don't have that wheel to look at.
Right.
So I would never start any business. I mean, if I wanted to sell, water bottles, I would immediately start at least an LLC and probably an S corporation, to be honest with you. But that's a tax thing.
I should have talked to you before I started my business then, because I didn't give any thought to that. I just figured, you know what? It's such a low risk business that I'm in. Who's going to sue me for marketing their product for them?
I don't know what your accountant says, but from a tax point of view, I wouldn't be a sole prop either.
Really?
It's individuals writing off tons of business expenses is red flags.
Oh.
And a sole proprietor is basically an individual.
Good to know. That's good to know almost a year in. So, and I know this probably isn't your forte, but it's switching from sole proprietorship to LLC. Is that a difficult task?
Not at all. Not at all. Just do yourself a favor. Search your Secretary of State. Make sure the name's available, because I have seen people go get their EIN for their LLC, and then they search the name and find out it's taken and they can't have it. Now they got an EIN for a company they can't have.
Wow.
Yeah, it's people do it backwards all the time. Search, make sure it's there, get the name, then apply for the EIN number.
Right. So back on real estate, though, and I know I want to let you go fairly early because I know you have a podcast to get ready for. So I don't want to keep you too much longer. But real estate, the no money down thing, a lot of people, think. And I had somebody on who was an expert in this, from a guy who actually got a television show on it, Dave Seymour from Flipping Boston. But this whole no money down real estate thing, is there funding? Is that a legitimate business that they look at to help you get funding for something like that? You want to start one of these house flipping real estate thing, or is that one of the things that you kind of had a disaster in 2009 and kind of walk away from, and it's Give me your take on that.
Ironically, no, I walked away clean because I had a great business credit profile. I had tons of credit, and none of it was tied to me personally. So it really worked out well. As a matter of fact, I'd still be in that business if I had learned one thing, which is government contracts are one-way contracts, not two-way contracts. You're obligated. They're not. They can change the terms anytime they want.
Wow.
And so my rent rolls were cut in 2/3 or in 1/3 of what they were. So I went from making money to losing money every month. Anyway, that being said, is there a loan for somebody who wants to go into flipping properties? That's probably a question for your sponsor, because I'm sure there are some loans, but they're just going to be personal loans. I will tell you, not many people want to loan money to flippers, other than hard money companies. Now,
but it seems like such a sure investment when you're looking at a house that they bought for $200,000 less than its real worth is now as it is, and then they're going to fix it up and put $30,000 and it's going to be worth even $400,000 more than they paid for it. Sounds like such a sure, safe bet for a lender. No,
have you ever done it?
No.
Okay, so that and you're right. It does sound really, really good, which is why people can sell their teaching programs about flipping real estate for thousands of dollars because people buy. Right. But the reality of it is, contractors rip you off, don't show up, do a shoddy work, you got to redo the kitchen over again. I've lost I lost $100,000 on one property that I went in thinking I was going to make $200,000.
Right.
There's problems that and lenders know how risky that is, because look, when you look at a property and you see what you see, you haven't opened the walls up yet. You have no idea what's inside.
That's
right.
True.
So, and lenders know that. So it's a risky proposition. That's why they'll dump them as opposed to fix them up. Like a foreclosure, they'd rather dump them. It's not worth it. They start tearing it apart. They don't know what it's going to cost them. However, there are loans for people for those products. They're called hard money loans. Now they call them private money because hard money scares everybody, but it's the same thing. It's high interest, high points.
Wow.
They charge you interest only. They usually give you a 1-year term so you can sell the property. And sometimes they'll even loan you the money for the first 3 months interest. That's how I built my business. But if you're smart and you have a business credit profile and you get high limit credit with places like Lowe's and Home Depot, and maybe you get yourself a Visa and a MasterCard, you can start building enough credit to rehab these properties without borrowing that money.
Wow.
You let somebody else fund it and then you pay it off when you flip it.
Right.
And I have a way that I did this it allowed me to scale from 0 to 300 in under 2 years. But you need to have a business credit profile to do that. You need to have a business credit profile.
Right.
Here's why. In the end, if my truck is in the company name, not tied to me, my gas cards are in the company name, not tied to me, my Visa is in the company name, not tied to me, my Home Depot card, my Lowe's card, let's use Amazon. Amazon didn't exist when I was doing it, but let's use Amazon because you're buying products, for your houses. But none of it's tied to me, and I'm an 800 credit score with 0 utilization. In other words, I haven't used my personal credit cards for anything. Now I get a great opportunity that comes along. Let's say a 30-unit apartment building for $300,000, which is a steal, right? I'm going to get a loan for that. I'm absolutely going to be approved because I don't have any debt. It's all tied to the company.
Yeah.
So anybody who's in real estate that doesn't use business credit is literally shooting themselves in the foot.
Excellent advice there. That's the most emails I'm still getting. That he was on probably 2 months ago, and every day I still get at least 3 or 4 emails about some of the stuff that he covered. I guess people are still listening to the podcast on it, but that's something, it sounds so interesting to people who are looking to make a quick buck and get rich quick, and I know nothing is anything that sounds too good to be true probably is, and that's why when you asked if I've ever done it, no, I haven't, for that one reason, because it sounds so easy, it sounds so simple, and that's what scares me away. If it sounded a little harder, I might, or more difficult, and some people actually laid out, you know what, you're probably going to fail at some point in it, and put it in that way, I would probably take a serious look at it and say, you know what, at least somebody's being honest with me. But when it's all roses and easy stuff, it makes me say, you know what, that's too good to be true.
Hardest easy money I ever made. And look, here's what's happened. There's a lot of gurus out there that did really well, as I did, from 2005 to 2010, because the market just went up. Just kept going up. It didn't matter. You could have bought a pig in a poke and 4 months later, it was worth 30% more. We had, and this is, I'm not disparaging electricians or plumbers or anybody else. We had normal blue collar job people buying $3 million houses down the Jersey Shore at 0% interest because they didn't care about it. They just wanted to sell it in 3 months and make $1 million.
Right.
Like so maybe they're gurus now, right? Oh, look how I bought a property, made $3 million. No, it's hard work. It's no different than building a house. It's no different than putting on a podcast show. It's work. I'm sure you don't just wake up every day and go, yeah, I'll wing it again today.
Yeah, that's what people think.
Right? Oh, listen, I host my own, as you know, and I watch a ton of information prior to my guests, so I know exactly what they ask them.
Right. Well, this has been really insightful and informative. I know the one thing I'm going to do today is get in touch with my lawyer and my accountant and see how I can, first I'm going to yell at my accountant for not telling me to get an LLC to start with. But I'm going to ask my lawyer to kind of help me get through the paperwork to flip it to a LLC instead of a sole proprietorship, because I've been skating along thinking I was fine for the last year because nobody's going to sue me for mismarketing them.
Yeah, but hey, maybe, I mean, look, maybe, hey, you said something disparaging about my company and boom, next thing you know, you just never know. And I'm not a lawyer, I'm not an accountant, and your accountant may say, your guess is crazy, you need to be a sole proprietor. That's what they say. I always listen to people I pay a lot of money to for advice.
Yeah, well, this isn't. I don't want to disparage him either. He's a friend of the family. He's a friend of my mom's, which is why the only reason I use him.
Gotcha. So it's really interesting. Like I said, it's nothing more than a tool, right? I'm not here to sell anything, but I want people to be aware of it because I believe most people are just completely blissfully unaware that it even exists.
Right,
and it's something they should.
Kind of unrelated, but sort of related, and I'll let you go right after this question. I ask everybody this question because of the times we're in. Are you optimistic for the business? And I'm focusing just on the business aspect of it, but I generally ask for the world in general. Are you an optimist for everything we're going through and that things are going to somehow work out okay?
100%, 150%.
Wow, good for you. That's the first time I ever got that kind of an enthusiastic, quick yes on it. Most people hem and haw on it and come back to somewhere between optimist and realist. Can I ask why you're so optimistic?
Yes, because I was a pessimist after I lost everything. And I realized it was a lot harder to get out of a hole when you're a pessimist.
Okay.
So I think attitude is everything. The minute my attitude changed, everything changed for me. Everything. Income, it all changed. Look, economies are constantly shifting, right? Prior to the internet, I was in the printing industry, right? When I saw what my son was able to do with a computer, I knew I was done. I was like, we're in trouble. They're going to be shipping our stuff to China to print. Like, we got to sell. We got to sell now, right? Should have been devastating. But, there's other things. So COVID caused this shutdown. But I have a feeling what's going to happen is you're going to get 5 to 6 monster companies are going to come out of this, that they created something, some service, something.
Zoom is and StreamYard and there's so many competitors now that are coming out of the woodwork. We got to get in that video streaming game and
right. So what's going to happen is the revenue is not gone; it's just going to move. You just got to be where it moves to, or at least be an ancillary service to that move. And that's kind of how I see it. So, housing's never going away. As a matter of fact, with all the, I also still have a real estate license, and everybody was panicking. Oh man, sales are down. I went, whoa. Not only do we have the COVID, people are jammed together. They're scared, and you have rioting. So to me, guess what? Suburban sales are going to skyrocket in the next 12 months. People are going to be like, I'm done with the city. I'm moving out.
Right.
And you know what? Called my brothers in South Jersey, and he has never been busy. He's getting offers on property, 10 offers at a time.
Yeah.
So I'm an optimist.
Well, I would definitely agree with that, and thank you for that. I think, and the message I give people in every crisis, there's an opportunity, and there always is, and there's always some result that you see, growth from what we see in devastation in other areas. It causes other stuff to grow. It's just the way nature works. It's the way business works. The way
I heard a saying a long time ago. I just started my company. J.P. Morgan didn't lose a penny in the stock market crash at 21 because he didn't sell anything.
Right.
He didn't lose a penny.
Right.
He made money. And there's another statement. I hear it, and it's blood in the streets, buy real estate. When things are bad, that's where the opportunities are. That's why you'll see the people say, oh, it's with what's happening. I just saw a news article today. The wealthiest companies made billions more during this COVID. I'm like, of course they did. They didn't panic. Right. So I'm an optimist.
Good for you, and good for. I think it's a good message to end on. I thank you for your time, and I wish you great success moving forward. And hope people get involved and learn more about what it is you teach. Please send me that link because I want to put it in the description as soon as possible. So because it'll probably be up tonight, the audio podcast, which is what gets the lion's share of the traffic. And I know people will definitely want to be checking it out, at least to find out if it's right for them. So thank you for it. And have a great podcast today. I know you're getting ready for your own.
Thanks, Matt. I appreciate it.
Thanks. Have a great day. Bye.
You too. Bye.
Steve Wible. Well, I know what I'm doing today. I got a phone call, 2 phone calls to make right after this, right after I say goodbye here. Definitely getting on the LLC. The big takeaway for me there, and I kind of kept going back to that like a broken record, like I often do, is that some of the stuff you really should be considering. And when I talk a lot to people, entrepreneurs who are starting up their business, a lot of this stuff, a lot of the problems that can develop, like in my case, could have been easily avoided with planning this stuff and knowing about this stuff beforehand. So either way, if you got an established business and you're looking to build your credit, go check them out and see what their education is all about. And if you're on the cusp of ready to start your business, as many people are right now because of the COVID stuff and because of the opportunity it presents, a lot of people will find they have more time than employment right now and always wanted to start a business and are getting ready to. There's important things for you to know about in naming your business and how you set up your business and all that stuff. Great stuff today, and I'm really glad we had him on. I hope you enjoyed this program. I hope you tell your friends about it. Come on back, subscribe, go to my YouTube channel, subscribe there. Go to minddogtv.com and get on my mailing list. And questions and comments, info@minddogtv.com, info@minddogtv.com. Until tomorrow afternoon, because I don't have a show tonight. My guest tonight had to cancel last minute because of illness in the family. Tomorrow at 1 p.m. I have Colleen Higgins, who's going to talk to us about reducing your pharmaceutical list by using medical cannabis, which is, I know it's a controversial subject, but it's an interesting subject. Basically cutting down on your prescription drug bills and use of pharmaceuticals and replacing it with medical cannabis. That should be an interesting program. And then tomorrow evening at 8 p.m., I have the fabulous CeCe Peniston, for the R&B artist with more than 5 #1 hits during the 1990s, and her biggest hit called Finally. If you were in a wedding band like I was in the 1990s, you know that song drove you crazy because you had to play it at every single wedding you played at. So until then, I'm Matt Nappo for the Mind Dog TV podcast. Thanks for coming today. Have a great rest of your day, and bye for now.